JB Cycles here with the weekend video on December the 7th. So the headline is just like last week, we are still following the 1980s scenario. I would like to zoom out a little bit and go through my cycles. You can find videos about these cycles in my playlists on my channel. Starting with the 28-year cycle and the 56-year cycle. As you see, we are at in the topping part of the cycle, and the cycle is bearish into the mid 2030s. So we should, within say a couple of years, we should see this cycle topping out, and then the weakness. And we also have the 3.5-year cycle, and the 28-year cycle is made out of 8 of these 3.5-year cycles, and currently we have weakness going into around next summer. I'm expecting some kind of a drop down towards the April panic lows, and well, some kind of a low next year, and then the next top in 2028. So we also have the sunspot cycle of about 11 years. So around solar maximum we often have recessions, but this is not really any reliable tool. And of course the 3.5-year cycle can produce bear markets and recessions between the solar maximums, but there is a higher probability of recessions around or just after the solar maximum. And when looking at the stock market, there is kind of a pattern where either we have a bear market starting with this green scenario around solar maximum or a bit later. And when we topped out in February, it looked like we were following the green scenario with a bear market coming right after solar maximum. But then we have extended this bull market, and now we are following this red scenario where we typically have a late top a bit after solar maximum. And this average is made out of these analogs, as you see here. We have 2014, 1989, and so on. We also have the 1928 scenario, which is topping a bit later here. But anyway, I'm expecting some kind of a weakness coming out of this 3.5-year cycle, although it's coming very late. It should come at some point. And when you look at well, here's the S&P and the theoretical 3.5-year cycle, and I have a wavelet that is kind of identifying this 3.5-year cycle. And because this cycle is repeating over and over again, you can use this wavelet to measure where are we now, or what kind of analogs do we have to this situation, and how did those analogs play out. And what I find doing that is here I'm measuring from the low of the wavelet going back 3 years or something, and it's telling me that one possibility is that the low we had in April, that was the cycle low. It was a quick and early cycle low. However, when I'm comparing with the analogs and doing a lot of analysis that I'm not showing you, I'm concluding that it's not likely that the cycle made a low earlier this year. It's more likely that we are extending this bull market. And if we are extending this bull market, it tells me that we are very close to the bull market high unless we have the crazy 1990s scenario where we just rallied like crazy. But the average of these more normal analogs tells me, well, the average has already topped out, but we do have some analogs that, you know, could suggest the top is early next year, but we are getting close. And I have this other perspective where I'm looking at the wavelet high, and again all the analogs say, yeah, we are very close to the bull market top, unless we have the crazy 1990s scenario where we just continue to the upside. And the average of these scenarios here in black has already topped out, but we see some of these analogs tells us that the top could still be a couple of weeks ahead. And when I'm looking at a shorter term wavelet, I'm getting something like this, again saying we are very close to a top, and we could expect 3 waves here with a low, you know, in the summer or in the fall next year. It could be the final low. And yet another perspective from another wavelet is giving me 2 scenarios. We have this green one that is, well, we are not quite following this green one. That one was suggesting we should already have topped out and been starting this downtrend, while the other scenario is suggesting the top could be like, yeah, in January. So it could be that we need to go see a topping formation into January. And I have another cycle, and that's the 73-week cycle, also known as the 18-month cycle. I do not know where this originates from, but it's a quite good cycle. However, we are currently at the cycle low. And that gives us an interesting setup, because several bull markets actually have this, call it inversion, where the bull market tops at or near the cycle low. It happened at the previous bull market high in 2007, in year 2000, and so on. And this scenario says, well, it suggests we should have made a December low, and then the final high in January, February. But it looks like we are a little bit ahead of this. So yeah, if it looks like we could be following this, not perfectly, but you know, the top could be still a couple of weeks ahead. Maybe we need to go a little bit sideways to make some kind of a topping formation. Also, we have the 3.5-year cycle here, as we see currently. It has normally I don't look at these small variations in the cycle. You know, the trend is, in general, suggests weakness into next summer or fall. But if we look at this, well, it says there's some kind of a weakness starting late January. So again, you could be seeing more sideways or even upside into January sometime. So zooming in more shorter term, my VIX indicator, my wavelets are currently saying we are in buying the dips condition. We should buy the dips. So, but I do not think we should make any new breakout and crazy momentum to new highs. So I think it will be kind of a frustrating buy the dip situation until it turns over into sell the rallies. But that could still be a little bit ahead. And looking at Bitcoin, you know, is behaving much better regarding the cycles. So Bitcoin is following my scenario, and the 4-week cycle is pointing down into mid-December. S&P, however, is behaving more bullish, but the cycle is now bearish the next week or 2 weeks. I don't know, 1-2 weeks. So we are following the scenario for Bitcoin. And the 17-week cycle, well, we are approaching the 17-week cycle low. My scenario calls for a mid-December low. And if we look at, well, we had crazy many days above the 50-day moving average for the S&P, and those analogs say that after breaking the 50-day moving average, don't expect any bear market, but it will be bought and the top will be a little bit later. So I don't know exactly when, but